Good morning folks, this is 10 Minute Trader. I was just coming out with another video today. I'm going to focus on the profitable trading principles. Been watching a lot of videos lately of people with this system and that system. A system will not on its own make you money. In fact, it's a very, it's a smaller part of successful trading. The most successful elements of trading is psychology and strict risk management. Of course, with a good system, but there are many good systems out there, and I see a lot of videos with people just telling you this is the system A, B, C, D, and E, but no backup as to how to operate that system. If you're going to be a racing driver, someone can give you a Ferrari, but if you don't have the skills to drive said Ferrari, you're not going to get very far. Anyway, we're going to crack on with this, and I'll be covering just a couple of things. Trend trading, which is the method of trading that I personally use, the old adage of letting your winners run, taking losses without hesitation. I'm going to go over some typical results over a 10 trade run of my system, psychology as we just spoke about, and a bit of back testing. Before we kick off, I'm just going to quickly show you the trade that I am in this morning at 6:26. The trade is currently at £747 profit, and my system tells me, my signals tell me when to get in and when to get out of this trade. As you can see at the moment, it's a bit of consolidation going on there. My stop is set well above where my system signal will tell me to come out. It may go up, it may go down. We'll see how the day goes. So how do you identify the start of a trade? When do you get into the trade? When do you get out of a trade? You must let the trade run to its full potential and never ever fight the trend. I've did that many times in the past, and there's only one result of that, and that is to lose money. Letting your winners run. This is a very old saying in trading, and for a bloody good reason it works. If you don't allow your winning trades to run, it will not eradicate your losses. And as I said before, you're going to take losses. Not taking losses is basically like a championship prize fighter expecting to win a world title without taking a punch. You're going to take losses. It's managing the losses by managing your risk and managing your psychology. Once you get a good system, that is just the start. The biggest part of it is going to be working on yourself, and working on your psychology. It becomes very tempting to grab a profit, especially if you just had a bit of a losing run. But as I said, the problem is if you grab smaller profits, it is not going to eradicate your losses, and it's not going to give you your profit. You must be in a position, or you must be able to watch profits disappear. I've got several trades a month that go into decent profit, and I watch that profit disappear until my signal comes up and tells me to get out because the trend has changed. Again, if I don't do that, I will miss the big trade, and if you miss the big trade, that is going to be the trade that is going to make your month, and in some cases a whole year. So to identify a trend, this is not a trend, it's basically sideways markets. This is where my system does take the losses, but I have to be able to identify when to get in and when to get out without guesswork. If you're guessing in trading, you're gambling. Simple as that. For example here, is this a start of a trend? Very well could be, but the system will identify when that quickly becomes evident that it's not going to trend and gets me out of that quick sharpish. This is an actual trade that was responsible, along with two other trades, for my profit last month of over £3,000. Now, another important element of my system is basically it will tell me when to get into trade, and I rode this trade all the way up, but a highly important part is to get your system, your indicators and your signals to make sure it doesn't pull you out of the trade too quick. For example, when we start going to the short side here, If your system is not correct, it may pull you out of this trade a bit too early, and of course it continues to rise up straight after that. So getting that is an important element of a system, is to get the right signals. My system is 100% mechanical. There's no guesswork. So basically it tells me when to get in, when to get out, and to make sure I'm not coming out of that trade too early. This slide here is a big part, and certainly was a big part of my psychology. I've thrown on a couple of moving averages in this one. It's not my system that I use, but it's a good example for the point I want to get across here. As you can see here, the candle, and basically the tail of the candle, or the wick of the candle I should say, did actually cross the line. A lot of these systems will determine that you enter or exit a trade when one moving average crosses another. Not the candle, the moving average itself. So some people will see this crossing over, and I did it myself time and time again, to my detriment, as in losing money. Assuming that this was going to cross, and of course it didn't cross, and it continued to go to the short side. More so here, as you can see the wick of the candle here, again crossing the blue moving average here, many a time, and people do it all the time, close out assuming that this is the end of the trade, and then of course it's not. It continues to fall steeply on the short side, and again you've just walked away from a lot of profit on the table. And again, those profits are what are going to be the difference between you being a profitable trader or a losing trader. So take the losses without hesitation. Before you go into a trade, you've got strict money management, strict risk management. You have your figure that you're willing to take, the risk you're willing to take per trade, so stick to it. It's easy said, and it does take a bit of work in yourself to do it, or it certainly did in my case. I've made many mistakes, I've made them all. But one big mistake, as I keep saying, one thing I never struggled with is taking the losses, because of the belief I had in my system, which was due to the training I had from a couple of individuals. One in particular was Vince Stanzioni. You can Google Vince. Very successful trader. Vince doesn't actually trade short term, Vince trades long term. A lot of people say that short-term systems you can't mix with a full-time job. Well, I do, and the reason I managed to do that is because I do that with alerts, basically sent to my phone, which will give me a quick buzz to say that I need to go and quickly pay 1 or 2 minutes attention to what's going on, whether I open a trade, close a trade, or whatever the case may be that it needs attention for. But going back to it, if you start pulling your stop, if you've agreed that your risk is X per trade, and you start dragging that stop, waiting for the trade to turn back in your favour, it's going to only end in one result: you losing money. And over the long run, you're going to lose your account or blow up your account. You'll end up in one trade that's going to wipe out 10 to 20% of your entire account balance, with a single trade. That's going to leave you very upset, and it's going to be very hard to recover from that. So do not trade out with your maximum risk. Determine what your risk is for that trade and stick to it. If the signal tells you to get out, you get out. And do not hold. Just again, do not hold out for that trade to turn back. The system I use is mechanical. If it tells me to get out, get out. This is a list of 10 trades that I took from my actual trading log. What it shows there is, at the time, this was a £6,000 account. I was trading at 2.5% maximum risk, maybe too high for some people. I'm very comfortable with it, and it allows me to grow the account at a slightly faster rate to get to my ultimate goal. It's important to have an ultimate goal when you're trading. I don't just mean for the month or for the year, but the long-term goal. What is your aim? Write it down. What are you planning to get out of trading in the long haul? Because trading is a long haul game. And if you get, yes, a good system, but if you have strict money management and you sort your psychology, you will be successful. and via compounding you will make a lot of money over the long term. So on this particular 10 trades, I did lose 3 at my maximum risk of £150 here, here and here, but a good point or a good thing to point out is you don't lose your maximum risk every trade. So out of the 7 losers, I had a £76.20 loss, I had an £86.20 loss, and a £75 loss and a £110 loss. Now the key thing here for the system that I use, on these 10 trades I had a 30% win rate. That means I lost 7 out of the 10 trades. But the fact is, the trades, and by sticking to the trade and letting it run to its potential, it realised a trade over that 10 of £1,200. The rest, as you can see, are another small winner here of 265 and a smaller one of 18. But the end result was basically a profit of £685, 60 pence with a 30% win rate. Psychology. You have to work in yourself. You have to work in your psychology. Identify your weaknesses and work on those weaknesses. There's some good information out there on various methods and how to do that. I would highly recommend a book by Vanke Tharp, which is Trade Your Way to Financial Freedom. He's worked with the best in the business, basically high-end traders that discuss what they do, how they worked in their psychology, and basically gives you the tools or ideas on how to deal with your own psychology. So as I say, get your system, work out your risk management, and then start working on yourself. Now you can start with a demo account with many brokers. I do highly recommend that. It's not the same if you don't have the skin in the game, but it will allow you to get very used to the platform of your broker, how to enter trade, how to get in, how to place your stop losses, the basic functionality of the platform. So it is a very important step if you're just starting out to get used to that, but it will not test your psychology to the limit because it's not real money in the table, but it's a good starting point, as I said. So one of the last points I'm touched on here is back testing. Because I operate a 100% mechanical system, that allows me to back test. What's back testing? It basically allows you to go over the previous year or 5 years or 10 years, whatever the case may be, and because the system is mechanical, you can plot on the charts where you would have entered and where you would have come out of that particular trade. It doesn't guarantee future results, but it is a very good indication that that system is working in the particular, will work in the particular market you're looking to enter, whether that's a forex pair, a commodity, an indice, whatever the case may be. You cannot accurately backtest on a system that has hunches or where it's open to interpretation, where you might have got in, might have got out, or fundamentals, for example. But as I use a mechanical system and know exactly where I get in and exactly where I get out, it is very easy for me to then backtest. Backtesting is not the be-all and end-all, but it will give you confidence that your system is going to work in the particular market that you have chosen. So that's it for today, guys. It was just a quick run over some of these principles. If you do want any more information, drop me a comment, hit a like, subscribe, and I'll speak to you soon, guys. Thank you.